Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel, as always, joined by Joel Elconin and Dennis Dick on today's show. Let's see, what do we have? We have earnings from Goldman Sachs. We have Nike trading up, which we thought might happen depending on who won the Masters. Well, Tiger won the Masters. Nike's trading up. We have the quiet period up for the analysts on Levi. So we have a few initiations to talk about in LEVI this morning. Best Buy CEO has stepped down, and we're going to talk about the rotation on Friday from growth to value in tech. Our guest today, Kenny Glick, owner of HitTheBid.com. He will join us at 8:35. Joel, give us the word here in the overnight session.
Quiet overnight session, unchanged at 29.1250. The only number on the upside. Friday's high, 1475. Our current high, 14.5. Our next resistance level does not come in until 29.25. Your October 2nd high on the downside. They only took this to 09.25. Nothing there for you, folks. I'm just looking at Friday's intraday low at 0275. Crude down 59 cents at 63.32. 63.30. Ran into resistance in the upper 64 handle and finally peeling back. You have gold in the red by 550 at 1289.60, coming up to that important 1280 level. Silver loses 8.3 cents, under $15 here at 15.88. And Bitcoin just hanging out here over 5,000. The future's up $85. Triple D, how you doing on this? Well, it's not tax day for you, though, right? You got to pay your U.S. taxes.
No, it's tax day for me, too.
Okay.
I pay U.S. tax because obviously
that's right.
U.S. money, so... and work for Bright Trading there. So I have to pay my U.S. taxes as well. I have U.S. and Canadian taxes. It's always fun. So anyway, so I have 2 tax days, Joel. Awesome for me.
Brutal.
Before we get started,
awesome.
though.
Are you done all your taxes? You get it all in?
They're done. They're done finally.
Good stuff.
Wait.
You, Spencer, you get it all in?
Mine are good. But before we go to the show, I want to ask Joel, how'd you do this weekend, man? You swam competitively, for real, against other people.
I swam my ASS off. Very happy. Didn't get
show
any
the video. You should show your video.
No, don't show my video.
I want to see your video of you swimming. You sent me a video of him swimming, and he's like, "Is this Michael Phelps or Joel Elconin?"
I didn't get that.
We should show. Why not?
Because people
professional.
Because
I showed Laura, and she's like, "Holy cow! You look like you could be on TV. It's really good."
Yeah, well, when you're in there swimming against a bunch of old farts, that's okay.
Looks like you didn't win. The one guy beat you on the end?
Nah, well, they put people in by different ages. But I had goals in the 6 events that I swam, and I hit my goals in 4 out of the 6. So I'm happy about that. But I don't think I'm going to see
the video, guys. Maybe tomorrow. We'll talk him into it.
I don't think anybody wants to see the video.
Yeah, we want to see Joel swim in his lap. He looks like it could be on TV. It's pretty good.
I'll just tell you one thing. I do wear. Tell them about the cap that I wear. Could you tell what cap I was wearing?
Yeah, I could see it.
Michigan football helmet cap.
He's
the only one to me.
Always representing.
Always representing the M. But why people tune into this show is not to hear about my swimming. They hear about
Sophicles wants to see it. You had one fan in there want to see it. Everybody else is kind of quiet.
After hours in pre-market trading, Dennis, can you even remember what went on?
No, it's too long ago. I can't remember anything. I just remember Tiger winning the Masters. Let's talk Tiger for a minute because this got to be good for golf, right? I mean, it had a lot of coverage because golf hasn't been getting, yes, the Masters is well followed by people who love golf. But I tell you, everybody who doesn't even follow golf were talking about the Masters there yesterday. Wouldn't you say, Mr. Israel?
I would say I am the embodiment of that. I have never watched more than a minute or 2 of golf in my life, and yesterday I watched it for like an hour. And so if I'm watching golf, then yes, everybody's watching golf.
Gotta be good for golf. Gotta be good for Nike. What's Nike stock do? It's up $1. Up 96 cents here. So got to be good for Nike, right? Joel, did you watch the whole thing?
No, because they
swimming.
did that early start. So
why so early? Why was the start so early?
It was the weather. Yeah.
Yep.
It was over by like 3 o'clock.
Yep. So then I just got the alert on my phone. So I did not see anything in that on it until the end. But we talked about it and the stocks that are involved with it. I mean, you could have played Nike if, based on Tiger winning, except you didn't know that. It's trading up 76 cents here in the pre-market trading. I got a pre-market high at 87.32. And what do you got in here? What's the all-time high? We'll just keep an eye on that.
We're close to it. It was 88.59 a little while ago. I don't know if that's you got to go. No, I think that's it. The recent high, I believe, of the move, just going back to a month ago, 88.59. I'm going to the book. What Joel finds is some other technical levels here. Let's go check out the book. It's always fun to look at the book. It's a little early in the morning, so the book's not going to be completely full. But, there's some size in there, Mr. Elconin. 87, 23,000 shares. 87, 50, 49,000 shares. 88, 38,000 shares. So somebody selling looks like a little bit of piece every 50 cents all the way through the 87 handle. So it's not coincidental that it struggles to get up through 87 here this morning because there's some size there. Not huge, 23,000, take that out. But the next level, 87.50, 49,000, only traded 16,000 shares this morning. I don't think it opens over 87.5.
I think that's a good call. Trading at 87 even, a quick spike up in the pre-market. The pre-market high is 87.32. Let's see here. Only 16,000 shares have traded.
Yeah.
Got a gap to fill in here too. A gap between 85.90 and 86.83. So I think
take that out today.
Yeah, fill that gap. And what's the all-time closing high for Nike? If we wanna find a number here. The all-time closing high was made just before earnings at 87.69.
This tough sledding all the way up though, because you get beyond that. Then at 89, you got 60,000 shares. 89.50, 50,000 shares. 89.75, 22,000 shares. 90, 93,000 shares up at 90. So this book is getting thick here when you get above 87.5. So it's not easy sledding for the stock. I don't expect this thing to just rally $3 on this here today. I actually think you're going to see a little initial pop maybe here, and maybe we struggle at that 87.5 level that we see in the book. But if it could keep chewing through it, it's possible. But I mean, there's so much, and this is just another thing. Like you get a technical guy that's coming in and you look at the highs. I really think it's what order flow that makes the technicals when you jump in and you look at what orders are out there, what's in the book, because it's the orders that make the picture happen. And when you look at the order flow, I believe you get ahead of the technicals. So that's why I always call myself an order flow trader. I subscribe to every book that I possibly can to get a feel for where is the size, where is the institution, where are people, looking willing to sell this thing. I want to know that ahead of time before you see it get up there and then it comes off, and then the technical guy will say, oh, well, we have levels here that we were at before. But we could see levels ahead of time. Don't you agree, Mr. Elconin?
I agree, because the people that are putting these orders really don't care who wins these orders are GTC orders.
Yeah, they're probably out there already.
Yeah, they have targets on these things. But let's just go through the golf stocks just real quick if golf's getting a boost. Do you know what kind of sticks Tiger's using? Is he using Titleist or Nike, old Nike? He's got old Nike equipment. Yeah, right. He's got the Nike shirt.
I think he's all Nike'd up.
Callaway Golf has just been bunching up here, a bunch of quiet days. I mean, a bunch of highs at 1660. So we'll keep an eye on that.
I think it's good for golf all around. I think anything related to golf here could show a little bit of rally today. So ELY is bid up here this morning, 1660. Nobody's hitting those bids. So somebody's saying, yeah, going to be an okay day for ELY. Obviously, Callaway isn't the one that's victorious, but I mean, if you get people more interested in golf, at least in the short term, I'm going to go out buy some clubs. I want to, now play some golf because I'm pumped up for golf. Could be good in the short run for some of these golf companies.
Yeah, no, I know. You have Golf, GOLF. That's the Titleist maker. Is that that's trying to break out too. That's been struggling here at the 23.75 level, 23.70.
And it's bid up at 23.80 right now. Good call, Joel, because you're seeing 20 cents a bid is up here, and nobody's hitting that bid either. So I think you're going to see an okay day for these golf stocks.
I got a few
I
more
wouldn't
here.
want to sell them off the open.
I got a few
unless
more
they
here.
open way up.
I got a few more. What about Drive Shack DS? They own some golf courses.
What's the symbol?
DS.
It's bid 480, bid flat. This is a REIT. Oh, Spencer, you're reaching here a little bit, but Drive Shack REIT. Anyways, 480 bid. The REITs don't move as much, so that's going to be the issue, is that they just trade off interest rate more than anything. But somebody's bidding it up.
And boy, I don't think it's helping Club. That's the Town Sports International Holdings Inc.
No,
I think
that wouldn't.
Oh, that's an ugly looking monthly chart. I think that they're the ones that own country clubs.
Yeah.
And
no, this wouldn't.
Yeah.
This wouldn't.
Is that what did
So
up
we gave
Dennis?
it ELY, GOLF. Look for little pops in those things. And I don't know if these are going to be sustained, but if you're day trading, it's good to know that I think these things could show some strength there. So if you're day traders out there, maybe get a little bit of action there in those couple golf stocks.
All right,
Always something to be aware of. Long term, I'll probably fade the pops.
Yeah, Under Armour. How'd Jordan Spieth do? I didn't even look at the results.
Yeah, where'd Spieth finish?
Not great, I think.
Yeah.
And it's trading. It hasn't traded at all here, and there's no market in it. So I don't know if UA is going to get any drop off this or pop. But keep an eye on it. I mean, these do move off these off of obviously the players as well. We've talked about that before.
At the top of the show, we had Citi come out with their earnings. So let's go there now. Q1 EPS for Citigroup, $1.87 versus $1.80 estimate. Sales of $18.58 versus $18.65 billion. So an EPS beat and a sales miss for Citigroup in the first quarter of this year.
Do GS with it because it sounds similar.
Okay. Goldman Sachs was a couple hours ago, or about an hour ago now.
7:20 this morning.
Yep. Q1 EPS $5.71 versus $4.89 estimate. So EPS beat, and you're right, sales miss, same story. 8.8 versus $9.04 billion. So same story for Citigroup and Goldman Sachs.
Bottom line beat, sales miss. Both stocks get a little pop on your initial reports. Both stocks have leaked it back. Both stocks had a fantastic day on Friday, so a lot of big numbers already priced in. That's probably going to be your issue if you're trading these two stocks here this morning. Always fun to go look at the buck. You want to start with Goldman there, Joel? Where do you want to start, Goldman or Citi?
Goldman got a nice pop. Let's go with the GS.
Let's do it.
Yeah, pop up to 211, and now you're leaking here back at the 207 area. For this one, we want to see it clear the close. The close is 207.84. Takes that out. The high from yesterday I would use instead of the pre-market high. I'd use 209.97. That has been the recent high of the move. That was off the JP Morgan earnings on Friday. I don't like this thing under 206.37. And the only reason for that is the next daily low doesn't come into 201.57. So if you are buying it, you are leaning on it, just be aware, maybe a bit or two at the gap fill from Friday at 05.45. But just a lot of air underneath the low from Friday. We're still above it.
Give some props out to our friend who's been on the show a few times, Doug Cass. I just saw him tweet out there when Goldman was popping. He's a little bit of a day trader there too. He said, I expect this to fade back on the pop, and he's exactly right. Goldman has now turned red. So good call, Dougie, if you're listening to the show. I know you listen to the odd time there. GS is in the red here, so it was a good call by Doug Cass on Twitter this morning. Let's go to Citigroup. It's jumping up, and it's actually leaking a little bit here now too. It's trading up over 68.
Yep.
I'm going to go to the buck while Joel breaks down the technicals.
Yeah, it just stuck its head over 68, 68.10, and then the 68 sellers clamped it down at that level. That's been the high over the last half hour here, 40 minutes. The next bracket high starting out is 67.63. That is a new high for the recent bump. You haven't been in the 68 handle since you went to 69. This was back in November of last year. So they've got to get rid of those sellers at 68. On the downside here, you're far, far away from the low from yesterday, which was 66.64. But the bulls must defend the close at 67.42. We're only 15, 18 cents above that. So underneath the close, look for Friday's low at 66.64.
Citigroup 68 has 25,000 shares, which is nothing for this stock. Really got to go. JV spec is correct. You almost got to go up to the 70 to really find significant size in the book. And I see 150,000 shares up at 70, which is the big whole number and hasn't been there for a while, so not surprising. Just before we move on from the banks, let's talk Wells Fargo because it had an ugly day on Friday. All the banks are going straight up. This one decided to go straight down. It's having an ugly morning because the analysts, we talk about them chasing price. They are totally chasing price this morning. We got 3 downgrades this morning here for Wells Fargo. I played this one too. I played this one from the short side. Took it home short Friday because I was like bound to have a downgrade or two coming. And I was rewarded here this morning. I covered already here this morning, but just playing it overnight, just speculating that we probably have an analyst or two that downgraded the stock, and they did. And I just covered in the 45. I covered early. I covered the 45.90 area. It's trading down to 45.75, but I also covered before the Citigroup and Goldman earnings. So I wanted to get covered early because I didn't know if that would help lift it. And obviously those aren't going up, so it's not going to help it at all. But analyst chase price. Spencer, 3 downgrades this morning. Who's downgrading it?
I am seeing Bank of America and Buckingham both downgraded from buy to neutral. I have not seen the third one.
Goldman.
Goldman. Oh, boy. Okay.
Yeah, Goldman downgraded too. So you got 3 downgrades here this morning for Wells Fargo, trading down to 45.75. It's why, and I'll just say it again, when stocks are really weak and they have an outsized move, you get those analysts that are going to play catch up there. It's why I don't jump in on the first day. A lot of times it's why you see follow through after a big move too, because the next day you have analysts coming in because they haven't, this came out Friday morning. They haven't had time to research and get their notes out there. They do that over the weekend, publish on Monday or, late Friday night. And obviously the stock is going to trade down because of that. So I don't see much in here, Joel. That's the one problem.
I do.
Joel's got a little for you.
Yeah, I do. And this is something I talked about on Friday. I didn't know if it would get there or not. 45.55 stands as your pre-market low. That was made off the 4 o'clock open. And then you go to your dailies here, and back in when it was beginning of the year, 3 lows right there at the 45.5 area. The low for the year, 45.47. So 45.50, that's my level of the day. Buyers are already stepping up a little bit ahead of that. So big move overnight, huge move overnight. I think the longer it takes to crack 45.5, I think the shorts will have to buy this on the rebound. But
it's just a big move all around. I mean, this stock traded 48.80 on Friday at the high. So now you're talking about Wells Fargo, a huge bank and stock that has a very low beta and a nice dividend. Trading down 3.93% dividend at the close. Now you get it down, you start getting down to 44, 45, it starts getting a 4% yield. So that's something to consider there too, because there's not a lot of banks with a 4% yield. So you'll have value traders coming in here eventually too. So I don't think this is one that I would say, it's going down to 35, 40 bucks, unless we get another financial crisis. I think you're going to find support. I don't know if you're going to jump in as early as 45.50. Maybe get that support today. That's a great level for day traders out there. If you're looking longer term, 43.02 is obviously the low of the move from back on December 26th. I think you'll find all kinds of buyers down there. So if you're coming in short now, maybe a little bit late to the party. Like I said, I just covered my short here this morning. So, and obviously, in some cases you could get more downgrades still happening, but usually the analysts come in the next day, and that's what we saw with 3 downgrades here today.
And just think about the amount of stock that you need to move this thing 70, 80 cents during a regular session.
Some time. Take some money.
Real quickly, Dennis here, I just wanted to talk. We had a question here about the book, and someone was asking Spencer, what order flows are you seeing on Boeing? And my response to that is, man, in a $300-400 stock, it's just they don't show the big orders as much because they're really going to get picked on. And I think that you do a lot of the traders or the institutions in that probably do a lot of VWAP. Which we'll talk with. Sure. Yeah, we'll talk about that with Kenny when he comes on. But just talk about the book and something like how often would you lean?
I always look at the book, and usually I have it queued up, so I bring it up and it comes up, when I'm looking at the stocks as well. So I put, but again, we got a $375 stock, so you knock a zero off. A 5,000 share order in Boeing is somewhat important. Where, that might have to be a 50,000 shares order in a stock like Citigroup or, a thicker stock. So a thinner stock, you see 5,000 shares in the book, it can matter. But one thing to consider is Boeing's been chopping up through everything. So there's no GTCs you're coming into, good tail cancels, like it hasn't been to this level in a while. There's no big psychological level here. I mean, down at 360, we know it's been finding support down there. We know it's been finding resistance at 400. I'd say it's probably just a lot of air in between there. So like if I'm just looking down 365, I can see 13,000 shares to buy down there. At 380, I can see 10,000 shares to sell. Those are the only triple digit numbers I even see. So, you maybe get some institution maybe was picking some up there in the lower 360s, going to wiggle out of some there at 380. And you get up to 400 again, I think you find all kinds of sellers too. So this has just been range bound between 365 call and 400. And it continues to be in range bound, and it bounced out of there on Friday.
I know it did. It did. It's one of these you just gotta put on the blinkers and say, okay, this is support. I'm buying it. I don't care what happens if I get stopped out or lose 50. Also, ooh.
You okay,
Joel?
Yeah. Did you hear that noise?
Yeah. No, we're good now. We're good.
Yeah, something was flipping.
I better go check. Sounded like my favorite Martian landed on my roof there. But
you got Martians there. Joel, if Joel's off the show, he's been abducted by aliens. We'll have to get Musk on the show to get a solution for that one. All right, that's the worst tangent we've ever went on with Joel getting abducted by aliens. Let's move on. Let's go Best Buy. CEO stepping down. What's up?
Joel was about to say something though. What are you
going to say?
Well, you guys threw me off here. Boeing. Like if you want to trade the range in this a little lower risk way, you can try the options market. I'm sure that the premiums are really jacked, but at least if you buy a debit spread or you do something like that, at least you know what your true loss could be, instead of like, okay, I'm going to be long 1,000 and it comes up and opens up $20 lower. So that was my only note on that.
All right, Best Buy has a new CEO this morning. They previously announced, I believe, that Hubert Joly was stepping down as CEO, and today they named their new one. Corey Barry is going to be the new CEO of Best Buy.
Stock's trading down $1 on this. So this is a stock that has been running impressive. We have not covered Best Buy a lot this year. This has been one of the best retail performers of the year. Started the year down at $52, and it's trading $72. You're talking about 20-point move on a 50. It's like a 40% move here for Best Buy. So it was one of the best buys here at the beginning of the year. A stock that just figured it out, and we talked about it back in the day. Me and Joel were even bearish this, back in like 2011, 2012, when it really started getting beat up and looked like Amazon was eating their lunch. We were calling it the showroom for Amazon. They figured it out. They figured out, how to compete with Amazon, and people go in there and they get their thing right away, the product right away. For some reason or whatever, Amazon has not eaten Best Buy's lunch. So it has been one of your better performers, at least, when you think about, Best Buy versus Amazon. And stock has come back a long ways from those lows back in 2011, 2012, when everybody thought Amazon was putting them out of business.
Trading at near the lows of the pre-market session. This is a pretty big move for Best Buy, trading down 87 cents. Let's see what happens at 72.29. That was your April 5th low or April 4th low. You haven't hit that yet. And then you get into under 70, or you get to the $72 area. You see another low at 71.75. So this is, we don't know why he's resigning. It's fundamental news in the company, and some nervous Nellies are hitting it. But to me, it seems like I'll just call it 72 because that surrounds your April 3rd and 4th lows. Coming back on the upside, kind of a weak close and a weak day for the stock on Friday. So I'd keep an eye on a potential gap fill at 73.44, 73.60. Also Friday's close right there at 73.57 as well.
We got a big move here in one of the pod stocks, Aphria, here this morning, APHA, and it's trading down 12%. There's a lot of headlines here, Spencer. Can you give us some highlights?
Well, let's see. They had their earnings this morning. They released their earnings for their third quarter. I guess I'll read you those numbers. This is in Canadian dollars. It was 20 cents a share. Sales $17.8 million versus $10 million on the year-over-year basis. They also entered into an agreement with the company that was supposedly going to buy them, and now that they've come to terms that the offer is going to expire at the end of the month, it looks like. Did I read that correctly? I believe it.
And they're going to pay $89 million. How much money do they have?
Yeah, they're I don't know.
No, agrees to terminate your option. This is a lot of funny stuff that happens here with this offer. I'd like to get Alan Brockstein's comments on this offer. because there was some connection there too with the company that was making the offer and Aphria itself. So
GGP had agreed to purchase 27 million shares.
Okay.
And for $89 million.
And they're not going to do that now.
And it looks like
it just looks like that they're terminating that option, Aphria. So I don't know if they're
Goldman just goes red here by over $3 here. Just take 204.
Doug Cass with the call. Props, Dougie. On the show again. We'll get him back on.
I don't know. They've entered into like a debt call option settlement agreement. I don't really know what's going on
There's
here.
There's so many headlines here. It takes, it's going to take a CFA charter holder.
That's you.
Myself to analyze this and break it down. I have not had time to look at this and break any of this down here. There's a lot of headlines. So a lot going on here in APHA. Market is pricing in bad news. That's all you need to know. It's actually sitting up there at $10 and it's losing 13% here this morning. So market not liking this news. I've got to break it down and look at it a little more. And we obviously got Alan Brockstein there too, who we should get on the show back just to talk about this maybe in the next day or two, because I have no idea with all these headlines going on and this green growth brands potential bid that was supposedly on the table, but then some people were challenging whether it was even a real bid. Lots of funny stuff happening here at Aphria this morning.
Wasn't Seeking Alpha writing about this a while ago too? And then
all the time.
Yep. Oh, they do?
It's a fun stock to talk about. I mean, it is. And the pot stocks, people like them. These are widely traded stocks. I mean, it's already traded 300,000 shares this morning. So, they got the 5-6 pot stocks. These things trade. They trade like crazy. And we never even got to CGC on Friday. And CGC had some damn good news there on Friday because it was trading up and it got put into the S&P TSX 60. So, and that's one of the most widely followed indexes in Canada. So you're talking about a pot stock getting into, the 60 companies that is basically widely followed in Canada. I mean, that means it's for real. The industry is for real, in my opinion. So impressive move really for CGC on Friday, and it held up. It's down here a little bit this morning with the Aphria disappointment, but I mean, that says something in itself. It's a vote of confidence for the industry, I think, when you get CGC going in the TSX 60.
This APHA, just going to break down the technicals for that on this one. You're trading near the lows of the pre-market session. And the problem is when I look at this thing, I see it trading down at $1.23. I mean, I really like to look in support, and I like to use the daily lows. And you did have a daily low at 874, right? So you're kind of in that area. So if we can get back above 874, 875, or, you got a little chance of a rally if you can hold. But then you really fall off here, and you just have not traded down to the $8 area since February. So keep an eye on 808 to 831. It's still a big move here. Actually, we're still above that 874. So after that, I mean, buyers are just, some shorts are going to have to cover. I just don't see a lot on the daily charts. Let's just call it 8.25 to split those two numbers.
Jump back over here. Just if we're going to go ratings here for a second, which I wouldn't mind getting a few of those in. There was a bunch from this morning. One that we might as well talk about in the context of the Disney Netflix move is Netflix. Netflix getting downgraded this morning here at BMO. But holy cow, was their movement in Disney versus Netflix. And we got half of this right because I thought Netflix was going to go down. I said it on the show at 364 when we were in the pre-market. I said, I can't believe it's not down more. I did short the stock. I made a little bit. I always scalp out too early. But Disney, I thought when it got up to 125, I thought it was overdone. I did not see this getting up to 131 or wherever it went. That's an incredible move for the House of Mouse overnight or in one day. It's got to be one of its biggest one-day moves ever. I'm shocked at how strong that stock was. And I was on the show a couple days earlier saying I like Disney. I just never saw a move like that coming off this news. So in any regard here, big move for Disney. What's good news for Disney did turn out to be bad news for Netflix. BMO downgrading here this morning. So a little bit of the Netflix sell-off continues here this morning.
Yeah, boy, 130.90. Who thought? Actually, I was kind of joking around when it was like 126, 127. I was like, hey, it's probably going to see 130. And it did.
Unreal.
Huge volume, 65.25 million. Biggest up day. So on big volume, that's a good sign. I guess you just got to see what happens. You got it near a round number, right? 131. So 130.90. So I would say, boom, boom. You take that out today, boom, just keep going 131, 132, 133. But, maybe some of the institutions are looking at this thing and saying, man, this thing hasn't moved in 20 years.
Move.
Yeah. Is there more meat on the bone? Is there another 10, 20 points here in Disney by the end of the quarter or by the end of the year? Yeah. Or, hey, we finally got this thing to move. Let's take a little money out of this thing and put it into something else, that maybe you've been looking to buy. So it's just kind of an asset allocation here. So I'm waiting for this to break through 130.90. Get into the 130 handle, stay above there and keep going. I think 2-3 days where, you don't get up to that area, you might start to get a little bit of a fade, but very important 130.90. I don't know. This just doesn't have the feeling like remember the Mickey D's finally broke out, analysts running everything.
It just feels like it's so much so fast for such a big stock. That's why it almost needs a cool off period before it can start to go higher from here. But I would tell you, Joel, what you just said with the institutions, maybe reload and maybe take some money off the table. There's one institution doing it already here this morning. I got 84,000 shares to sell at 130. So there you go. There's an institution right this morning saying to close at 130.06. Somebody's saying, now I want to sell it. So if you're looking at 93,000 share selling balance, which is published here, we can tell you it's all at 130, 84,000 shares of it. Somebody offering 130 for 84,000 shares. Big seller there coming in early this morning. Can take it out. I mean, it's already traded 114,000 shares, but something to consider is that, what you're saying is there's some institutions that are obviously willing to take some money off the table here.
And good point by Jazz here. Earnings on May 8th, and they better come out with some pretty good earnings. I did not.
A lot of air now.
Yeah. A lot of the details of the pack. This is a lot of speculation that that everyone, first of all, is to be the package that they want, and the people are going to pay for it. So a la carte TV, I mean, this is moves that we expected in this sector, to see if Disney's got it right on the first try. And we'll see. Like I said, first 130, and then I guess taking out that all-time high at 130.90.
Also, Netflix earnings tomorrow. Don't forget that.
Ooh.
Big.
After the
It's going to be a big report for Netflix. I'm going to say if it does get the pop, I think people are going to sell in the pop. I don't think this is going to be one that just blasts off. They might have some good numbers, and the news algo doesn't incorporate all this other stuff that's going on. I think if it pops, I think it's an opportunity to get short. So I might actually be looking to short that pop tomorrow. We'll see what it does today. We're going to have a full another 2 days of trading of information because the report's after the bell on tomorrow, right? After the bell?
Yes.
Confirmed?
Yes, confirmed.
Yeah, we just want to get that number. So it is confirmed. So you have 2 full more days. So let's see what it does tomorrow. Let's see what it does today. Let's see what it does tomorrow. But if it's just kind of hanging out and showing some weakness going in, even if it pops into the number, you'll have a few people who are probably looking to get their money back that maybe got blindsided by this. I don't know how they got blindsided by this, but the stock did go down 20 points basically in the last 2 days, even though everybody knew this was coming, that's the craziest thing about this trade to me. It's not that, Disney got the big pop and Netflix got, and it's, I get, that it's the fact that it didn't really run up. It's like it just went on this news that we kind of already knew was going to happen. And we knew Disney was coming out with a product like this. And then it was like, don't buy it on rumor, or buy it on news with the Disney. And don't sell Netflix on rumor, just sell it on news. It was like the exact opposite of what you think usually happens. Usually it's buy it on rumor, sell on news. This was don't buy it on the rumor, but buy it on the news. It was weird.
Real quick, gold breaking down for Robert Wilco. It has been in a trading range, Robert. I would just keep an eye on this 380 area. You had a recent low at 384.90, but 1280. But 1284.90, I see some other lows in that area going back to earlier in the year. So it's been in a trading range, but better hold 1280 here. 835, Dennis, did you get through all the imbalances, or do you want to bring Kenny on?
Let's bring Kenny on. We've
All
talked.
right.
There's not that much. So I'd just quickly say, 180,000 to sell. Disney's selling balance is now 129,000 shares.
Wow.
CVS, 134,000 shares to buy. So that's
Cover of Barron's.
That is CVS.
Yeah, the next.
They got
great-
downgraded by Oppenheimer.
Right?
Really?
Yeah, the
Yeah, so we got
Barron's cover is
Barron's versus
overruling.
the analyst. Barron's obviously winning.
Interesting. All right, we'll take a quick break and grab today's guest, Kenny Glick, hitthebid.com. We'll be right back with Kenny. All right, welcome back, everyone. Pre-market prep. Spencer Israel, Joel Elconin, and Dennis Dick, now joined by Kenny Glick. He's the founder of hitthebid.com. Kenny, how's it going this morning from my home in central New Jersey?
Great. How are you guys? Thanks for having me on this morning.
Always a pleasure having you on, Kenny. Just real quickly, we were talking about like institutional orders and the order book, and some of these big thick stocks. You have the areas to look at, but what about? I know you like the VWAP, right? So, do you ever incorporate any of the book, into the VWAP? Because we were talking like a stock like Boeing, and how much size does that show at at the big whole numbers or half numbers? So, when you're using the VWAP, is that all you're using, or are you trying to incorporate? Do you use the open book at all for any indications?
Actually, I'm very old school still. I'm looking at the level 2, just looking at size. But I'll kind of glance at a big block scanner that I also have just to take a look if there's any big blocks going off. But one thing I've noticed, and I've definitely noticed this because I've been staring at screens for 22 years. Back in the day, back in the days of eighths and quarters, and when you saw market makers on the box, you kind of got a feel for where the market was going. If Goldman Sachs was going high bid and you kept seeing him go to the bid, you knew he was a buyer. Now, I find that you'll see some big size on the offer. I guess we can call it spoofing in a way. But you'll see them stacking the offers, and you'll see some crazy offers out there. And that's almost like an indication that this thing's going higher. So I look at a stock, if I'm looking at a VWAP break and I'm already convinced that this trade's going to be going my way, and I see big blocks or some big size on the offer, I'm talking about in the level 2, I'm actually more convinced that I'm going to be in a great trade. And that's why I was loving this PCG on Friday when I saw more people on the offer on that stock probably I've ever seen on any offer. It was like they were telling me this thing's never going to break 20 ever in the history of mankind. And of course, I was like, okay, this thing's definitely breaking 20. And it was one of the best trades. I mean, and it was 999s all across the board. It was like they were trying to scare everybody. And I was like, guys, we got to buy this stock here at $20. And it took off.
That had been a story stock and made its move back up. I guess some government relief here, 22.85. So down 23 cents today. Do you see the opposite, like on the bid side, like the opposite? Like when you see huge offers? Okay. All right. Can you?
I see them when they're trying. Again, it's the same exact illusion. They're trying to stock is. Pardon me. It's having a bad day, and then you'll see these bids come in and just kind of like, they pretend that they're going to have a bid, just like Lyft was doing, like on the way that was getting hammered. And there's a big bid, and you're thinking, all right, here come the big guys to protect the stock. And no, it just went right through it.
What do you think about Lyft? Like, and now look, it's come off over 25 points from where it came out the next day, obviously after the IPO, when it got up to $87. Now you look at it at 59. Is this something you're getting interested in here, or you just hands off till it stops going down?
Now, the way I'm looking at it is, take the flip side for the good IPOs that nobody's talking about, TIGR. I don't know whether or not this is the, Chinese Robinhood as it was described to me, but the one thing that's been following the traditional way of trading, what's called 1999 style of trading, is that when you have an IPO that's successful and you're getting through 10, you're getting 1250 out of it. 1250 breaks, you're going to see 15 breaks, you're generally looking at 1750. Same thing with TradeWeb going through 35. You had to be thinking this thing's going into the 40s. When you had Jumia, or whatever that was, JMIA, broke 2250, you got to 25. Now you should be looking at 2750. So those traditions are still in play. Momentum stocks and these big half number, whole numbers, trading 2.5 point increments. So on the way down, I'm thinking the same thing. So now that Lyft had nobody there at 72, nobody at 70, nobody at 67.50, 65, so forth and so on. Now that that we hit the 50s, I see no reason that this thing doesn't see 55. And if it doesn't hold 55, we're going to the big 5-0. and then we'll see what happens there. That's where, same thing with Alibaba. Alibaba was getting crushed right out of the gate. And once it started flirting with that big 5-0, that's where that thing found support. I think. I'm not sure.
It did. It was weak. Everybody thinks of Baba going straight up, but really you're right, Kenny, because that thing went up and got to 120. And then in 2015, it almost got cut in half. It did get cut in half, really.
I think it was about $50. Yeah. So then when it didn't come into the lower, it didn't get any lower. That's when I was liking it when it got back over 80. But yeah, I'm not a fan. I'm really not a fan of Lyft. And again, it's just basically sentiment. And, going back to the flip side, if this does turn into a good IPO and it ever does break, I don't care if you don't buy it at 50 or 60 or 70 and 82, and you're crying about it when you didn't buy it at 60 and the thing's flirting there with 86.80. I think 86.80 was the top print. When it breaks 86.80, kids, buy it. And that's going to be it. If this ever does achieve any kind of success, one day it'll be just like Alibaba breaking back over 90, and it'll be a great buy. So for me, I'd rather play the momentum on the way back up, and I know that's going to be a good trade, other than trying to pick a bottom right now. But it's actually not been a bad trading stock. It's been finding support on its demise down to into the 50s. Would want to own it.
Okay. For example, here, with the lift at, 57.66 is trading down here in the pre-market. Do you need like the 55? I know you're just not going to, stick a blind bid out there the first time. Do you need, like a double bottom? Do you need to see, all of a sudden the volume starts coming down on the sell side? I don't know where the VWAP, but I guess if you're looking at a 1 minute VWAP today, but you're just not going to just throw that 55 bid out there the first time. Maybe if you're short.
You're talking about shorting it too, aren't you? Like you were talking to get down to 57.5, you'd short it down to 55, right?
Absolutely. If you can get a short off. Yeah, of course.
Yeah.
But the thing is, I'm not, I'm more of a, my anytime I'm in a swing trade, for instance, like this Tiger, TIGR, the only reason I own it still is that there hasn't been a significant reason to sell, except for that one when it broke back under 15. And then as soon as it broke back over 1660, I bought it back. It's really one of the only stocks that I've owned, that one and TradeWeb and some of the other IPOs. I got a smidgen. But with Lyft, I'd rather just wait for that bottom to present itself. For instance, like PCG, even though I came in this morning long the stock, I was actually looking for it to gap down to prove to me that Friday move was really significant. So now that it's gapped down, if it gathers some steam this morning and goes back into the green, I'm buying more PCG. So just like Lyft, give me one of those days where it's everybody's like, oh my God, when's the stock ever going to bottom? And then that day, if it finds a bottom, that'll probably be a real bottom. So no one's going to be able to pick the bottom. But when it does happen, you'll probably have an intraday reversal. And then that next day, either it'll be a proving ground. So, for instance, today, let's say it capitulates down to 52.63, I don't know, and goes green. But then tomorrow, if it gaps down again and then establishes itself as today as a real bottom, then tomorrow will be a great buy. That's the way I look at all of this stuff. I need the stock to prove it to me to want to be worthy for me to buy it. And, right now, I don't look at anything as a hold because I love earnings season. I'm looking for big gaps one way or the other. I'll be trading Citibank and Goldman Sachs and, looking at APHA today. I think they reported also as soon as my internet comes back. But, that's the kind of thing I'm looking at right now. But liquidity is key for me during earnings season. That's for sure.
Can you talk about, just your trading style? Like when you're talking about trading all these things, how many trades would you have on? Are you focused on one or two things, ideas at the same time? You got a dozen trades on at the same time? How many things are you watching? How many things you trade at the same time?
I'm only one person. So I during the day, I'm maybe looking at 3 or 4 at the same time.
Okay.
It's always going to be one specific trade. I'm looking for reversions to the VWAP later in the day. I'm looking for gaps that are going to get filled from, earnings reports or news. I'm looking for some of those therapeutic stocks that are always gapped up 100 to 200% in the morning to roll over and die. And that's what I'm focusing on. So today, I'm really going to be staring at, I believe it's Goldman Sachs, Citibank, and, maybe a handful of other companies that reported this morning. Yeah. Obviously, I'm looking at PCG. And I don't own a ton of stocks anymore. I'm out of all my UVXY because they've already destroyed that. I don't find, shorting it right now at these prices to be, worth it. So I've exited all that. Right now, I generally have 3 stocks. I've got PCG from Friday where I, bought it back and when it broke that 20. Funko, because I'm addicted to those dolls. And I got BFF. That's my last weed stock. I don't own Cron anymore. I had that for a long time. I'm just not a big fan of owning stocks right now. Even though it seems that this market has, gone up every day this year, I still think it's very difficult to, pick 3 or 4 winners that you're going to have where, you're coming out better as a holder than a trader. Take for instance, Ameren. Everybody loves this stock now that it's, hanging in there. But if you look at the chart on Ameren, AMRN, if you bought it November 5th, it's the same price today, 6 months later. But if you look at that chart, my God, it's given you this amazing short opportunity. You had this triple bottom and a great buy, and then it got back to the top of the range in the 22s and became a great short again. So for me, I'd rather just be liquid and try to make these, these day trades / swing trades. And, the days of owning stock for me are, I think a thing of the past. If I'm going to own a stock, it's going to be the diamond, Qs, or the spies.
And what about for your day trade? Do you have a price threshold? Because I'm looking at some of these stocks that you mentioned, PCG and Ameren, and I see a lot of them in like the $20, $10, 10, 20, 30. Do you have a particular price threshold? Like, are you out there banging out the Amazons with smaller size, or, what do you look at from a volume and a price threshold?
I'm a 5 to 50 kind of guy.
Okay. Yep.
Those are my go-to stocks because I could feel comfortable. I trade because I do a lot of the education seminars in the morning. I'll trade live in front of people for the first 2 hours of the day. So I don't want to be nervous while I'm doing that. Trading in front of a live studio audience. I don't want to have too much size and not be worried. So 400 or 500 shares of a $20 stock. And that's what I try to show people too. How to find these VWAP reversals where you could take a $20 stock and have a 80 to 90% chance of making that 25, 30 cents on the trade. And you do that 2 or 3 times a day. That's day trading. That's you're just trying to generate a profit every day. But only time I stray from that path is during earnings season, because then anything goes. If you're gonna gap Amazon, down 75 points on an earnings report, I'm looking to buy it. You got a stock that's already ran 30 points into earnings. Like, I don't know where Goldman Sachs is this morning, but, a lot of these banks have run into the earnings report. So today's the only day I'll be looking at Goldman Sachs, and usually tomorrow. So it's always, for me, about earnings, because that's when the volume weighted average price for me, I don't know if anybody has seen this correlation, but more volume, more better. So we've got more action, more volume, and that will be the only time I stray from, trading these $5 to $50 stocks. I'll go, during earnings season only.
All right. Kenny Glick has been on with us. You can find more of his insights by going to hitthebid.com. Kenny, as always, thanks for the time and have a good rest of the day.
Hey, man, thanks for having me on, guys. Good luck. I'll speak to you soon.
Good luck out there.
Thanks,
All
man.
right. 8:50.
All right, take care, guys.
8:50 here. Thanks a lot, Kenny. On the nose. Joel, any action?
This Goldman is down
leaking.
364. Yeah, at 204. I'll just take 204.42. Did mention that under that Friday low, there wasn't a whole lot here. So perhaps be looking for Goldman. I don't know if we're going to test $200 today or not. But when you look at the dailies here and you've had this big old run up. Let's see if 201.57 comes into play. That was your low from Thursday, and then a low right around 200. Citigroup hanging up here near the 68, so it looks like it wants to test the size there at 68. Currently trading 67.85. That's up 43 cents. So that's
Not much size there though.
No, okay.
It was 70 was huge. I'm just trying to look what it's got now as the book fills up a little bit more as we get close to the open.
Sure.
31,000 shares at 68, so it's not huge. Was it through it on Friday? That's always a tell. Yeah, it was through it on Friday. So the thing is, when you're looking at books too, when it takes out the size on Friday's price from size of 68, the GTC would be gone. So it's just people who are reloading now at 68. So that's always, a tell. Even if you don't subscribe to booking, kind of guess where the size is a lot of times. It hasn't been up to a big whole number in months. Probably some institutional people looking to dump it if it gets up there. But when it goes through the level, which it did on Friday up to 68.30, it's cleared everything out. So now it's just people who are reloading today. So you've already had 30,000 shares reload today. So there's somebody doing that. But you really got to go up to get to the next big level. You got to go up to like 69. And 69 is not much. And then 70 is what JB Speck was talking about earlier, where there was over 150,000 shares. So that's where size really comes into play there.
All right.
Before
go ahead, Spencer.
Before we started the show today, Dennis said he wanted to discuss a bit of a rotation he observed on Friday from growth to value in tech, and we didn't get to that yet. Dennis, was there
growth to value in everything?
In everything, okay.
And you could really see it in tech, where it was really pronounced. I mean, the easiest way, if you really want to like tell what it's value coming in favor, look at Burke.B, value Warren Buffett, and when you see Burke.B having a good day, value is in play and value is coming around. I mean, the house of Disney, it started really with Disney. And I actually was talking about this a little bit on the show and talking about it in the chat as well, just briefly. I thought you might see some rotation come out of the higher PE stocks because you knew Netflix is looking a little bit weak off that. Disney lower PE stock. They were looking at value stuff. They were looking at stocks with lower multiples on Friday, and they were selling the stocks with higher multiples. It was very pronounced in the tech stocks because you saw stocks like CRM, Square, stocks with a higher PE getting hit, and you saw stocks with the lower PEs like Intel was up. You saw it in, a lot of the chips were up. I had a bunch of written down for examples, but of course I can't find all those examples from Friday there now. But what you really saw was a rotation happening, and it was pretty clear from higher PE names to lower PE names. Does that continue here this morning? Possibly. It's all about identifying those trends. We don't know if it's going to continue or not, but it was definitely prevalent. I could see it on my screen on Friday where they were buying stuff with lower multiples. So you got to be aware of those little rotations, because if you're coming in here and saying, oh, I like Square, I like the chart, I'm going to come in and buy it. I mean, the overall rotation can bring a good stock down too. So even if you like the chart and it sets up well, you get a rotation happening, an overall picture like that from growth to value, you got to be aware of it. And that's why a lot of those stocks were down on Friday. It was just rotation.
All right, let's talk about this one that actually I think we've managed to avoid discussing on this show, even though it's up every day, and that's Biopath Holdings, BPTH here. They announced this morning that they are withdrawing their secondary offering. So so much for all of you who thought you were getting your shares diluted. You're not. But this one is just crazy, so I don't even know what you can say about it.
I can't trade this stuff. I've been trading for 20 years. I've been trading professionally for 20 years. Made, I make thousands of trades a month. Sometimes hundreds of trades in a day. I can't trade something like this. And everybody is attracted. And I know this is the kind of questions I get because people, tweet at me and they ask questions, or they, my email, or they, reach out through chat rooms or whatever, and they ask questions. 8 out of 10 times when I get a question, it's always about some crazy stock, some moving stock. because people are naturally attracted to making money quickly. They want to get rich fast. People want to trade this stuff because they can double their money overnight. I'll tell you, it's the way to get poor fast, though, because yes, there are some people who can trade this stuff. Yes, some people make some living doing this type of stuff. This is the hardest stuff to trade. It's unpredictable. The spreads are wide. If you're wrong, it's hard to manage the risk. It's exact opposite of my style. If I was trading this stuff, for the last 20 years, I don't think I would be in business anymore. So if you're newer to trading, I'm going to tell you, boring is, for me, at least myself, and most of now I've been up break trading for 20 years, and I've seen a lot of traders come and go. I'll tell you who the successful traders are, and these are guys that trade hundreds or thousands of trades a day. Some of these guys are, almost high frequency traders, and and some of them trade at lower levels as well. I mean, you've got some guys that only make 4 or 5 trades a day, other guys that make 1,000 trades a day. But the most successful guys are the guys that trade the boring stuff, the predictable stuff, the stuff they're doing statistical arbitrage with, just making little, advantage of little inefficiencies in the market. This is just wild. This is like going to the casino and throwing it on red or black and hoping it hits, in my opinion. And I mean, some people are going to get mad at me for saying this stuff because I'm sure there's some traders that do okay trading this type of stuff. But I'm just trying to help, the newer guys out there. If you come in here trying to get rich fast, it's the way to go broke fast. So the name of the game for me is like base hits. Don't try to hit the home run. Base hits, little base hits, little base hits. Get that average up. Try to take, and on this, I just can't control the risk. I have no idea where this is going. Nobody knows where this thing's going. Go to $30, go to 10. Who knows? In the long run, I think this is probably back down. In the long run, they're easier to call because these things, explode. And they go higher, and then, the dust settles, and 2 months later, they usually go, 3 months later, they go back to where they were. The odd one doesn't, though, and that would be the one that would blow you out. So, I mean, stuff's just really hard to trade.
Someone who thought it was good news bought this up off the 4 a.m. open. It's turned out to be, I guess, pretty good news because it's still trading up $5.25. But it's just since you hit that high, someone's just selling stock here. Lower highs for the most part for the majority of the day. Thick, red bars. It's still up 5 1/4. So even if you came in your mark, you're still making some good money on this one. So I see a low probability, not no probability, of this running back up and like smashing that pre-market high, and coming down to fill the gap would be important today too. If it got back near the 17 area, but right now,
you got overhead supply issues too now, right, Joel?
Yeah.
Like if we're trying to make a call on it, if you're saying you're going to trade this thing, and if I'm not going to trade it. It's too wild for me. I can't control the risk. If I was trading it, I'd be shorting it. That's my opinion. If I was trading this thing, I would be shorting it. I won't be trading it because I don't know how to control the risk. I could short at 21, it'd be 24 in my face. I don't know how to control the risk. I think these things typically, after they're broken, every pop is usually a selling opportunity, and that's what we've seen. It had the ridiculous move. I don't know what it was, from 10 to 70, and then it broke, and you got pop. You had a few pops. It's always been a selling opportunity. I think it probably is a selling opportunity again here, but this is too wild for me to trade.
Just real quick, a question on TradeWeb, which had just an incredible run from the IPO. While everyone was looking at Lyft, they should have been looking at TradeWeb. It had a big day yesterday. It had on Friday. It had that reversal. It went over 42.98 to 43.31. So brought people in there, and then it had a flush, and you took it down to 41.01. So that's a pretty big red bar. That's the biggest red bar it's had. So I say warning Will Robinson on this one, and I would keep an eye on the $42 area. 41.87, that was your close on Friday. The old-time closing high, 42.06. So if I was looking to exit this stock, I wouldn't so much be looking at 43. I would see what price action happens at 42, and let's see if it gives back a little of that amazing move.
Trend's still up, but I agree with you. That's an ugly candle there from Friday. So now I think if you get up in the upper 42s, you find sellers. So I think, I'd be more of a inclined to sell pops on this, with stopping out at the high. So if I'm playing it from the short side, I would not want to be shorted if it was above, say, 43.50.
All right, real quick before we wrap, an earnings ratings roundup for the day. We have Nomura initiating some chemical companies to buy, we have Nomura upgrading Dow to buy, Eastman to buy, Huntsman to buy. We've got The Levi Strauss quiet period is over this morning. We've got a few initiations on Levi Strauss. Morgan Stanley is neutral. Citigroup is buy. JP Morgan is overweight. Goldman Sachs is neutral. So pretty split neutral to positive on Levi Strauss. This morning we have talking about Wells Fargo already. We have Phillips 66 PSX downgraded Jefferies to neutral. Goldman downgrading Nokia to sell. Credit Suisse downgrading Infosys to underperform. Actually, 2 downgrades for Infosys this morning. Also, Morgan Stanley downgrading them to neutral. And we mentioned the CVS downgraded Oppenheimer. That's apparently being overruled by it being on the cover of Barron's, but they got downgraded this morning to neutral at Oppenheimer. And that's pretty much it. So,
one that I'm watching this morning too is just analyst commentary from Weight Watchers. So WTW, they were positive. Morgan Stanley on Weight Watchers. No rating change here, but some positive commentary there. Has the stock up 3.7% here this morning. So this stock has been going straight down forever. It needed an analyst to come out and give it some positive comments. It got that this morning. So I'm actually interested in this. If this pulls back, I would not want to. So again, if I'm setting up a trade for you, 1755, so call 1750 my stop out. If I'm buying it and maybe get in the low 18s, maybe get a shot, this morning doesn't take off. Maybe it's buy at 1830 and risk yourself 80 cents. But I think there's some room here that you could maybe, get a little pop. I think there's some short interest in this one too. So, not trying to, this is a very tricky because you're going directly against the trend here this morning. But it could be a stock that could get a day or two of relief. And maybe get back up to that $20 area because it has been so weak. I mean, this stock is straight down this year from 45 to 17. I'm not getting on board and saying this is the bottom for Weight Watchers, just saying if I'm day trading it, be aware that there's positive comments from Morgan Stanley, which could help the stock out for the next couple of days.
What happened with that spread? I just wanted to ask you with the CVX. I know I saw CVX found support at 119 on Friday. 119.20 was a former low.
Again?
Yeah, I didn't.
The ratio 0.3869. Let's go check it out. So, because we were saying it was only a buck out, and then they came on, David Faber came on and said that OXY was sniffing around there too, but they were already kind of out on it. So, and you saw it actually went, I think like it totally closed. So we're looking at APC. So if we take just get out your trusty calculator there here, because I still don't have a spreadsheet built, which I should do today. Just get tied up on Fridays doing other things. So calculator, we're going to take the current price of Chevron CVX, which is, let's say 120 times 0.3869 gives you $46.42 plus
16
the 16.25 cash component gives you 62.67. APC is trading at 62.30. So yeah, so it was about a buck out. It's only 30 cents out here right now. So market's still speculating that, hey, maybe somebody does, what you were saying, Joel, so props to you. That maybe there is another bidder that comes in because they're only putting a 30-cent discount to risk arbs on this deal. So if there's no bid that materialized, I would expect that to actually widen a little bit there. But again, you're still 30 cents, discount here. I would just think there'd be some risk that, the deal doesn't go through, more risk than that. So, I'm surprised it's only 30 cents.
All right. And on that note, that'll be it for today's show. Thanks to our guest, Kenny Glick. Thanks to all of you in our chat rooms on YouTube and premarket.benzinga.com. If you missed any part of our show, catch our podcast. We're on iTunes, SoundCloud, Stitcher, TuneIn, and Google Podcasts. Just search for Benzinga or PreMarket Prep on any of those platforms. Please remember, all the information from our show is for informational purposes only and not meant to be investing advice. And that'll be all. So hope you all had a good weekend. Hope you have a good rest of your day. And we'll see you on Tuesday.